I'll be showing you about Juniper Networks Inc. and just type it in Google and this information will appear. Now, let's go through together. That's the name of the stock and that's the symbol. And it's 25.34 US dollars if I buy it today for one stock. It's a billion size firm, it's a big size firm, and it's paying a dividend yield. I just want to point out that any company that is paying dividend, that means it's a positive sign. That means they're financially very strong because after paying their creditors, loans, liabilities, they still have extra money. That extra money pays to shareholders as dividends. So, any firm that is paying dividend, that means they're financially very strong. So please don't worry if the dividend yield is very less. You know, if any firm is able to pay a dividend, even if it's less than 1%, that means they are financially very strong. It's a strength, not a weakness. Let's go to Wikipedia and search this box and see when was this founded. I can see it's 1996, 23 years ago. Now let's see what employees have to say about this firm. I will just copy this exactly from Google. Copy this exactly from Google and paste it here and type in Indeed reviews and let's have a look. It's 381 reviews, 4.1 star. Go through the reviews, read through the reviews yourself, check out the jobs they've listed, and we will now check the reviews in Glassdoor as well. That's a brilliant website as well. Let's go to Glassdoor and we have 2,300 reviews and it's 3.7 star. Check out the jobs they've listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos, and check out what people have to say about it who work there. Let's go to Yahoo Finance and see what key executives are getting as salaries. That's very important to know as well. So I'll just click on JNPR, which is the Nasdaq symbol, go to profile, and I'll just show you one thing. Sorry. Where is it? I'll just sorry. JNPR and go to profile and please have a look at the sector, industry, and employees. And I can see 5 key executives, but 4 of their salaries have been shown. One, it says not applicable. That's one important thing because you need to find out why it's not applicable, because we need to know all the information regarding the salaries for it to be transparent. So they have only shown us 4 salaries. We need to know 5 salaries. So you need to search why it's not applicable. Now, let's go to Justia Patents and see if it has any patents or not. And I'll just type this exactly that I copied from Google, paste it and enter. And I can see, please concentrate on applicant or assignee because these are people who have full rights of the patents. And I can see patents in 2013, 2012, 13, a lot of patents in 13, 12. Please look for recent patents as well in 2015, 16, 17, 18 because that means they're still innovating, which is also very important. And the more patents a firm has, the more stronger it is in the market, which is brilliant. And it's difficult to beat this firm because it has a lot of patents. That's a brilliant news. So go through the patents yourself. Let's go to macro trend. I go to price ratio, price book ratio, and I just want to type in the name. Now I just want to explain you briefly. If the price book ratio is less than 1, that means stock is cheap, it's undervalued, it's a discount, please buy it that time. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it will get. So sometimes it takes time to load on this website. Please don't worry, be patient with it because it has a lot of data, but it will make your life quite easy. Please let me know if you have any requests for me to make to do research on a particular stock that you're studying right now. I'd love to do that. Or if you have any questions for me, or if you're stuck somewhere, or I'm going very fast in the tutorial, please let me know as well. So we're just waiting for it to load and then we'll continue. Okay, I can see it's 1.84, which means if somebody buys right now, they'll be paying 1.8 times more money to buy the stock. It's 1.8 times more expensive. Somebody who bought in, for example, 2011 March, they paid 2.99 times more money. So the stock was they bought it for $38, which was only $12 worth. Somebody who will buy right now, they'll be paying 1.84 times more money. Just go to other ratios, click current ratio. If the current ratio is less than 1, that means stock is risky, and because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe and it has a good margin of safety. Please look for 1.5 or more than that. Let's have a look. Right now, I can see that it's 2.13, which means that it's above 1.5. It's a safe stock. Let's look at the previous trend. Has it ever been below 1.5? That's my question. So I can see that it has been below 1.5 for once or twice, but that's not plenty. But I can see since 2005 till now, consistently, it has been above 1.5, and that's brilliant. So it has good margin of safety in terms of current ratio. That's brilliant. Let's look at debt equity ratio. This ratio will tell me if the company is mainly operating on debt or equity. I'm looking for zero point 0.5 or less than that for it to be brilliant and have a good margin of safety. Let's have a look. I can see this right now. I'm looking for zero point 0.5 or less than that. It is less than zero point 0.5. That's brilliant. I can see that since 2005 up till now, consistently, it has been below zero point 0.5. So it's a very safe stock in terms of debt equity ratio. Let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Okay, right now I can see that it's more than 8%. That's brilliant. Let's look at the previous trend. So there's no consistency, there's fluctuations because it's less than 8%, then it's more than 8%, then it's a minus return, and then it's more than 8%, less than 8%. So there's no consistency as such. So it's not doing well. It's not consistently good in terms of return on equity.